Okay, good morning everyone. Welcome to Money Talks. So we're going to try something a little different today. We'll get back to that in a second actually. So yeah, we're broadcasting to you live on YouTube, Facebook, Twitter/Periscope. Now we're also going to try something different today. This is what is it called? Clubhouse, which is a new audio app, and this will allow us to bring people into a live chat, and I will broadcast their questions live. So in addition to taking the questions via the other platforms, I will try to take questions here as we go. Okay, so let's see. I think I'm getting a little bit too much audio here. Let me lower it a little bit. Hopefully that's better. I may have to raise it a little bit when we do the Clubhouse. We'll see how this goes. Okay, so everyone's doing well. We've got a lot to cover, and yeah, let me see. Sorry, here I'm playing with the audio a little bit just to get it right. Okay, so all right, we've got a lot to cover. So let me do some talking points, and then we'll get into some questions. And please, again, if you have a question and you want to ask on YouTube, just type it in and it'll get to me here. Facebook is fine, Twitter is fine, and also now you can raise your hand on Clubhouse. I know most of you probably aren't on Clubhouse. I just wanted to try it, see how it worked, see if it added any value to the conversation today. All right, so let's get into it. All right, so let's talk about Ethereum first, right? Ethereum is now clearly in charge in crypto land right now. While it looked like Bitcoin was leading the price action through November, right? Ethereum stepped up its spot price game in December and is now, I believe, almost 300% since November, and that includes the price, the little bit of pullback we had, which is partially recovered over the last couple of days. So Bitcoin is up 200% in the same period, but also had a pullback, which is partially recovered. So this is looking really bullish all around. We'll get to the pullbacks in a second, but bottom line is we're definitely in bull market territory here, right? So just to follow up on Ethereum, as the world's leading platform vying for the title of world's computer, Ethereum is simply raging. Now, I have a lot of questions around the 2.0 upgrade and its ability to deliver the required scalability enhancements, but the Phase 1 upgrade, which turned on staking, has been a resounding success. No one can dispute that so far. And now comes the hard part, actually upgrading the network itself. Bottom line is I'm super bullish on Ethereum. I added more on the dip personally, and I believe we can see even 5K Ethereum in 2021. I don't really do price predictions on Ethereum, except to say this idea of the world's computer combined with the technicals and the price action has me super excited. All right, so let's talk about Bitcoin for a second. Let me see if I can bring it up here really quick. I'll bring up the 1 hour and yeah. All right, so give me 1 sec. There we go. Let's see if it works on the screen here. There's the monthly, but let's see if we can get to there we go. Okay, so what you're looking at here is the up-to-date 1 hour chart via our friends at Bitstamp and TradingView. And right, we were in what I would call a consolidation pattern up until 2 days ago. The best way to think about a consolidation pattern, and I showed a picture of the triangle in the newsletter, to think of it as either the calm before the storm or basically a rubber band winding up to release some potential energy. Right, so these large triangles that we had, they're actually pretty weak as far as consolidation patterns go. And a break to the downside like this during a bull market, that's exactly what I want to see. The weak hands get washed out, large buyers can buy the dips, and the next run-up is even stronger. And I believe that's what we'll see here over the next few weeks. I'm not a price oracle. Be patient, but I think that we're headed for, I wouldn't be surprised if we're headed for 50 to 60K in the next few weeks in the next bull run. Again, just my opinion. All right, so I was reading a report from another crypto hedge fund that predicted that Bitcoin would reach 115,000 by August. So you should consider that a run-up like that would be a smaller percentage run-up than what Tesla experienced during its best 8-month timeline of 2020. So I actually took a stab, and if you go back to the newsletter, I created a simple model that shows what the daily Bitcoin price chart could look like if we actually get there. So you can check that out. It was kind of fun to do that mental exercise. But I could easily see us going sideways for a while, and we're going to have 30% dips. Let me bring that back up again. I want to remind you of what these pullbacks look like. So here's the pullbacks from the bull run that we had from 16 to 2016 to early 18. Each one of those arrows represents a 30% plus retracement or pullback, right? These things happen. What we experienced this week was a smaller pullback than the ones you see up here to my left in the chart. Okay, so please keep this in mind. Be patient. If you think that Bitcoin is going to go to 100,000 without pullbacks, you're not paying attention. You're not being realistic. Okay, so as I said, please be patient. Please be realistic, and we'll have some fun along the way. But don't stress over every one of these pullbacks. If you're stressing too much, you might actually be invested too much. Okay, it's okay to take a little bit off the table if we're really going for 3-4x win here. So please don't stress about this. It's just the way it is in Bitcoin land. So again, we're up about 36% over the last 30 days. We're going sideways. Basically, since we reached 32,000 in early January, we've basically been in a range between 30 and 40K. The range is right now mostly in that 36K range. As you can see here, we dipped below 30 yesterday briefly, and we've obviously risen above 40K a couple of times. Bitcoin has now spent more time in the 30,000s than it has in the 20,000s in terms of dollar price. Okay, that's pretty amazing given that it had never reached 20,000 up until a few weeks ago. All right, so Bitcoin is looking super bullish. Now, the other thing that we should talk about is stock to flow. Let me see if I can get you the stock to flow chart up here on the screen. For those of you who aren't clear on what stock to flow means, stock to flow is basically a model that shows the how much Bitcoin we need to double the price, double the amount of Bitcoin in circulation, right? So stock to flow basically says, given the amount of Bitcoin in circulation right now, how long will it take to double the amount of Bitcoin in circulation? And someone, this guy named Plan B, very cleverly figured out how to create a price prediction model based upon this phenomenon. Now, what's most interesting about it is that it's been just incredibly accurate. Okay, here it is. So this model has been incredibly accurate over the past couple of years, or the past year plus since he's created it. Not only did it predict the past, but so far, as you can see here in the red in the upper right, it's been pretty accurate in terms of predicting where Bitcoin's going. So, and in case you're wondering, the report that I mentioned from that hedge fund also predicted that Bitcoin would be at 35K in January, just as we were on this past Monday, which is astounding. But keep in mind that this is just a model. All models are wrong. Some are just better than others. In the meantime, please be patient. Have a plan, work your plan. Don't invest what you can afford to lose. In the meantime, this stock to flow model is clearly the best model that I've seen when it comes to predicting the price of Bitcoin. All right. So let's see what else we have in our talking points this week. So altcoins, right? Altcoins are definitely on the move. They're showing serious signs of life. I track this DeFi perpetual index that FTX tracks. It's basically showing a 4,000 massive bull run since November. Had a nice pullback this week. I wouldn't be surprised if it rages higher. Remember, we had DeFi was all the rage in summer 2020. As Uniswap started processing more trades than the largest centralized order books. And so for now, those trades are limited to Ethereum-based tokens, but I suspect that others will solve that problem soon enough. DeFi is now on the move again. And as I mentioned, the 4,000 point run-up. We're seeing Abra users trading a bunch of DeFi project tokens, including Comp, Lynx, 0x, Augur, in very large quantities of late. So for those of you who are making money there, congratulations. It's very early in the DeFi game. Things can and will change significantly in the coming months and years. If you choose to make a longer term trade, I suggest you keep it small and don't be afraid to take profits. At the same time, we've been tracking a bunch of altcoins. And there's another index that we're tracking, which is up 1,300 points, which is basically more than doubled since November. Abra users in particular, Hedera has been really popular with a 30-day run-up of like over 150%, and that includes the pullback. So we've got some top performers over the last 30 days, not only Hedera, but Cardano is up big, Doge, Stellar, Verge, Algorand, all up over 50%. And to be clear, as of the time I wrote the newsletter, Bitcoin was up 48% in the same time frame. So just in terms of investments, those alts are actually performing better. So let's see. My best guess is that alts will have a better run than Ethereum or even Bitcoin in 2021, but they will be crazy volatile along the way. And I'm talking about probably a small subset of them. And so please be careful. Only trade what you can afford to lose. Set alerts on the coins you trade, and don't be afraid to take profits. Altcoin trading is not for everyone. If you do your homework and have a plan, you may find that 2021 is going to be quite a ride. All right, so before I get into some initial questions and talk about an update on the Abra interest account, I've been testing out this new service called Clubhouse, and that we're broadcasting on right now. And as you can imagine, there's already lots of rooms popping up on Bitcoin. On Sunday, I participated in a one-to-one chat with Andreas Antonopoulos. I think there were about 400 people listening in this Clubhouse room to our back and forth. We talked for several minutes about Bitcoin's Lightning Network. I'm typing up some notes that I hope to publish next week. I'm going to try to finish it up over the weekend. It was a fascinating conversation. It shed some light for me on some of the changes. So I read the original Lightning paper that Poon and a couple of others wrote a few years ago, and some of the changes that have been made to Lightning since the original white paper was released have really fundamentally changed how even more bullish I am on Lightning now versus I was then, and a lot of those changes I wasn't aware of. So these changes have they've changed my opinion on Lightning. Not that I wasn't bullish before, but it's addressed some concerns that I had from before, and I'll try to address those when I do my blog post on this for next week. So I've always been bullish on Lightning's usefulness, but now I'm more bullish than ever on the value of the current reference design, its ability to scale Bitcoin even further, and I'm starting to get a feel, more importantly, for the economics, meaning what are the incentives for third parties to run Lightning. Now, there's a bunch of people here. I'm already getting questions. What is Lightning? For the newbies, Lightning is a means for doing very small payments, person-to-person payments on top of the Bitcoin network. So, for example, today, if you wanted to send somebody $2, the equivalent of $2 using Bitcoin, it would be unpractical to do so, since the network fee or mining fee you would have to pay to do that would be more than the amount of money you're sending. Lightning is a layer on top of Bitcoin that would make it very inexpensive to near free to be able to send that money. So I always had the question, what would the economic incentive be to run one of these Lightning Network nodes? And I'm getting a better feel for that now, which I'll get into in the coming weeks. So no idea when Abra would support Lightning directly in our app, but it's something we're looking at, and it's something I'm very, very bullish on. Okay, so we've got questions coming in already, and let's see. Let me take one from YouTube first, then I'll see if anybody on Clubhouse wants to chime in. Let's see. Somebody asks, Jay Wang asks, I'm most curious about Prime Trust, as our assets at Abra are custodied there. How can we assure that they remain solvent, and what happens if they run into financial issues? Okay, so let me give some context for that question. The Abra interest accounts are basically offering 10% on USD and up to 5% on crypto. We do that via our partnership with Prime Trust, which is a trust bank. And Abra then basically also runs a lending operation, which works with enterprise borrowers who then pay interest rates, which we then pass on to you as the account holders. So first of all, Abra's customers' accounts are not held in Abra's own corporate treasury. They're separate. We actually set up a subsidiary which only manages those funds, so they're not commingled in any way with Abra. I think that's very important for you to understand. When the money comes in to Prime Trust as a bank wire, for example, it's immediately converted to a stable coin. So it's actually not custodied in the bank as cash. Once the wire hits the bank, it's converted to a stable coin, and it's then stored at their custodial partner, which I believe is a company called Fireblocks, and Prime Trust then uses Fireblocks to manage that. However, once it's then lent to generate the interest, it's no longer in either of those, so it then is even more secure because it's completely off their system. So if anything should happen to Prime Trust, right, Abra would basically be able to return all of your funds to you because Abra is managing the investment of those funds, not Prime Trust. Effectively, Prime Trust lends those funds to Abra in order for us to lend them out on your behalf. Okay, so we're able to return funds to you in the instance, for example, that Prime Trust wasn't there anymore. All right. The other question I got was, how long can we expect the rates on stable coins to stay at 10%? That's a good question. We have not touched the dollar rate since we launched the interest account product last summer. Now, I have no crystal ball. I expect the rates to stay like this for quite a while because demand for dollars has been pretty high in the crypto world, but there's no guarantee. So I suspect the only thing that would cause the dollar rate to come down significantly is if the Bitcoin price crashed to levels that we saw like last summer. But anything short of that, I think the dollar rate is going to stay fairly high for a while. And that's one of the reasons why I'm so bullish on the interest account. We're getting just a massive number of new deposits, and the demand is very high, and we don't have to lower rates at all, even as a result of the increased demand coming into the system for those interest accounts. Okay. So for those of you not aware, we support all of the major USD stablecoins, as well as Bitcoin, Litecoin, and Ethereum, and the accounts are very, very popular. The most popular being, of course, Bitcoin and the dollar product. All right, so I don't know, Alex. Somebody had their hand raised. Let's see. Carter, did you have a question you wanted to ask?
I was just trying to figure out how to actually work Abra. I have it for like almost a month now, and I have some funds in it.
Okay.
But I'm not sure how to actually purchase crypto from it.
Okay. I assume you're based in the United States. So
yes.
Okay. So let me show you a couple of demonstrations in the app, and hopefully that will answer your question. So just give me 1 second here. I'm going to bring up the Abra app. All right. So hopefully you can all, those of you who are listening, watching online will be able to see. Carter, I'll try to describe what I'm doing since you're on Clubhouse, but if you're inside the Abra app, at the top of the app, there is the ability to add money. That allows you to link your bank account if you're in the US via what we call ACH. And for people who are outside the US, they can also do a bank wire transfer, which you can do as well. We support bank wire transfers globally. If you've purchased cryptocurrencies via other exchanges like Coinbase or Kraken or other exchanges, you can transfer those by clicking on deposit cryptocurrency. We'll give you a deposit address for your Bitcoin or your Ether or whatever, and you'll be able to transfer that over. So once you've done that, you can click on the exchange button and you can convert your dollars to Bitcoin or your dollars to Ethereum. And they will show up in the trading screen now as Bitcoin as opposed to dollars. Now, if you want to earn interest on those coins, you simply click at the bottom on the Abra interest account, and you can then transfer. There's a transfer button at the top, which allows you to transfer your Bitcoin from your trading account into your interest account. If you've ever used a product like E-Trade or Schwab or one of these online brokerages accounts, you know that they have a trading account and a bank account. And this is kind of similar to that. You can simply move the coins very quickly, pretty much in real time, from your trading to your interest earning. And you can also move them back, right? If you're doing anything like less than 50K, you'll probably get the money back in your trading account in a few minutes to an hour or so, okay? So you can easily move move those funds back and forth. So let's see. So I don't know, Carter, if I answered your question. And let me see here. I'm trying to put your mic back on, and I don't know how to do it. So I apologize for that. Yeah. Maybe you can raise your hand again. I don't know if that answers your question, but for some reason, oh yeah.
Sorry, no, I muted the phone.
Yeah.
I said it actually went through because I had the funds in there for almost 4 weeks now, and I was unable to actually purchase ADA, which is what I was trying to get.
I see.
But now that you explained it, I understand it now.
Okay, perfect. Well, that's fantastic. That's why we're here. So the other thing I would remind you is that we have a fantastic support team. The best way to reach them is support@abra.com. Alternatively, they're often on Twitter. We have a support handle on Twitter as well, but you get a pretty fast response these days. We are overwhelmed with lots of people pinging us, but on abra.com you will get, support@abra.com, you will get a pretty good response. So thank you, Carter. Let me go on to let's see. I'm going to try to take an online question here. Go back to the app. I've got. Let's see. Jade says, are there some issues or delays in receiving crypto and sending fiat to the bank? So let me talk about receiving crypto. If you're receiving anything like Ethereum or an ERC20 token that uses Ethereum, it really depends upon how much gas you may have paid for the transaction. If you don't pay enough gas for these transactions, we're seeing transactions actually either fail or get delayed. Now, the same thing with Bitcoin. When the network gets congested, if you're sending money or crypto from an exchange and you don't pay a high enough network fee, it may take hours or even days for that crypto to show up at Abra. That has nothing to do with Abra, okay? That has to do with the Bitcoin network itself. When you publish a transaction to send crypto, it basically goes into a huge pool of transactions. And the way miners decide which one of your transactions they're going to publish is generally based upon how much crypto or mining fee you're willing to pay them. So the more you're willing to pay in the mining fee, the higher the chances your transaction gets accepted quickly. And sometimes if the exchange doesn't pay a high enough fee, maybe because they're paying it for you, you may end up having to wait. So just make sure that you look at the network fee that's being paid and make sure that it's consistent. All right. I think the mic is working well. If anybody has any issues, let me know. Let's see. I hope, let's see. I don't understand. There's a question here. I hope Abra will update. Easy to manage. I don't understand the question from Uli Tawang. So maybe you can please rephrase the question. Arthur asks, can I lose all my money in the interest account if Abra were ever hacked? No matter the fact that it never has been so far. So Arthur, no, hacking Abra would not allow you to lose the money in your interest account. First of all, any funds that aren't invested at any given moment are not online, okay? They're stored in multi-sig wallets, which you can't access by hacking Abra. So in other words, if you hacked Abra or hacked into our bank account or our crypto, you can't hack because it's in cold storage, but there would be nothing to steal. So that's not, should not be a concern. Little asks, can you show me how and who I can talk to with step-by-step and using your apps? And yes, we have a getting started guide. So if you go to abra.com, we have a fantastic amount of content. The team has spent years creating this content. There are step-by-step guides. If you go to YouTube, there are step-by-step guides that show you how to deposit. If you're in, it looks like from your name, you might be in the Philippines. We even have cash networks there, and they'll even show you. You walk in with your pesos, and they'll show you how to get it into Abra. So there's lots of different ways to get started. Abra.com is probably your best bet if you already have the Abra app. Let's see. Joe asks, love the app. Do you think you will have any type of IRA or retirement tool, a Roth or something where we could put money in an interest-bearing account? Joe, fantastic question. This is a very common question that we get. And the answer is this is something that we would love to do. We haven't quite figured it out yet. There's a lot of legal issues with doing that, but it's something that we are looking into. Don't have anything to announce today, but stay tuned. It's definitely something that it's a very common request, number one, and it's definitely something that we would like to do. All right. So let me see here if we've got any pending questions. So Andrew on Clubhouse. So Andrew, I don't know if you can hear me, but Andrew, do you have a question for us?
Yeah, for sure. Just wondering if you could talk about the difference between you guys and like BlockFi or like Celsius or anyone else that kind of does,
Sure.
Interest.
Yep.
That'd be great. I haven't heard of you guys too much. Mostly I've heard of like Celsius and BlockFi, but really interested to know the differences.
Okay, great question. So there are obviously other companies in the crypto space that offer interest payments, and so this is Abra is not the only company to do that, but we think we are the best in the space. So I think we offer the best rates. I think we are the most secure. I think we have by far the deepest trading and order book. So if you're trading cryptos, for example, we offer over 100 different cryptocurrencies and you can move directly between them. I'm not aware of any company that gives you unlimited bank wires globally into your Abra wallet, gives you literally hundreds of different trading pairs so you can move between any two cryptocurrencies with the ability to move between those cryptocurrencies and your Abra interest account in real time. So I think Abra is very, very unique in these features. So I just realized I lost my demo screen here. So while I'm talking, I'll bring that up. So yeah, I would encourage you to give Abra a try and come back on and let me know what you think. But we feel like we've got a very strongly differentiated product. So I hope that answers your question.
Thanks, Bill. And just a quick follow-up. Is there a risk of principal loss? Like, if I deposit Bitcoin or Ethereum, is there a risk that I might not be able to get that asset back because of something, on Abra's side? Like if you guys lent it to someone that never paid it back, or again, like a hack or something, or some sort of flaw with the custody or whatever reason.
Yeah.
Is there a risk of loss, right?
Yep. So I understand the question. So this is related to the question I answered earlier. So from a hacking perspective, I'm very comfortable that you're not taking a hacking risk with Abra. There's no kind of central online place where people can go and simply steal crypto. We don't. It's not possible, right? If you were to hack our corporate systems, for example, there's no crypto to steal there. Most of that would be in cold storage if it's not being lent. When we lend crypto to third parties, generally those positions are collateralized loans. So in other words, if we're lending Bitcoin, they're collateralizing the loan in dollars, and that's how we basically manage the risk, right? So it's not like if they walk away with the Bitcoin, you're not getting your Bitcoin back because we're simply converting the dollars back to Bitcoin. And if the price moves against the borrower, we'll make what we call a collateral call, which means that they'll actually have to add more collateral to that account. And if they don't, we simply sell that collateral back to Bitcoin in this case to put them back in compliance so that the amount of collateral that we're managing is commensurate with the original deal that we had on a percentage basis. So you're not actually taking risk in terms of the other party walking away. It's risk in making sure that Abra is doing its job to make sure that these loans are appropriately collateralized, and that's what we do. So all of my crypto, for example, and all of my dollars are managed this way at Abra now, right? Anything that I'm not actively trading is 100% in Abra interest earning accounts, both dollars, Bitcoin, and Ethereum. And I know exactly how we manage these accounts. I'm very comfortable with the process. We run weekly risk management reviews where we look at the counterparties to these loans, and we set interest rates, we set collateral requirements. Some people actually have to pay more than 100% collateral, for example, on these loans, depending upon how they're using the funds, okay? So again, I think the most important point is that I'm comfortable enough to where 100% of my non-traded Bitcoin, Ethereum, and cash is in these Abra interest accounts. So I hope that makes sense.
Okay, and so is it still possible that there are under collateralized loans for specific parties?
Yeah. So very large hedge funds, for example, or banks with balance sheets that might be in like the multi-billion-dollar range, they may have 75 or 50% collateral, but the vast majority of the positions are either 100% or over collateralized. Now, even 100%, you have to be very careful managing it because, again, it's about the price movement of Bitcoin in any given day, right? Or the price movement of Ethereum on any given day. So we manage this very, very carefully in real time. So it's not just a question of how much collateral you have at the moment the loan is processed. It's a question of what happens to the value of the collateral as you're managing the loan. So we go even a step further than the question you're asking and actually deal with the value of the collateral as we go. So hopefully that makes sense too.
Okay, great. And just last part, and then I'll step off.
Sure.
Is this your guys' approach, in terms of risk management? Is this unique to you, or is this similar to, say, like your competitors? Would they also take the same risk management approach?
So our CIO, who runs the lending business, used to work for one of these other companies. And one of the reasons he joined Abra was the belief that the risk processes and the processes we were putting in place would be considerably better than what these other companies in the space were doing. And I was really excited about that because, again, we were building the product that we ourselves as the Abra management and employees wanted to invest our crypto, to manage our crypto, earn interest on it. And I am very confident that what we're doing is by far better than what others are doing in this space. I'm not going to say that what they're doing is bad. I just believe very strongly that what we're doing is the best and better than what anybody else in the space is doing as it relates to interest accounts.
Okay, perfect.
All right, well, thank you. Appreciate that.
Yeah, thank you so much, Bill.
All right, and please, if you have any other questions, join us. I'm going to get to some other questions here for now. And
I have a question, Bill.
Oh, sure, Carter, go ahead. I'm going to take one quick question here, and then I want to go back to, I've got about 100 questions online. So let's give me one quick question.
How often are you going to be doing this room, and when?
Yeah, so we do Money Talks weekly. Right now, if you go to our YouTube channel, you'll see that there are shows from the past year that are archived, and you can go back and watch all of them. I try to sneak into Clubhouse regularly. I often listen in the background when I'm working. I love some of the other chat rooms that are going on, but we'll try to integrate Clubhouse weekly into this show as well. And so it's every Friday morning at 9 a.m. Pacific. And so far, it seems like based upon everybody's participation, and I'm getting positive response online. People like hearing your questions, so we'll keep it coming.
Yeah, because I do follow the one on YouTube because it goes straight to my email address.
Exactly.
So whenever I get it in my email, I always click on it.
Great. All right. Thank you.
Thank you.
All right, so we've got some other questions online. Thanks, Carter and Andrew, for being our guinea pigs for the Clubhouse app. Congrats to Clubhouse. Obviously, it's working. Let's see. Ted Brady asks, in the USA, is a transfer from Bitcoin to interest earning Bitcoin a taxable event? So we do send 1099 forms. For those in the US, you know what a 1099 is if you have a bank account. It shows how much interest you've earned. We send that if you earn, I believe, over $600, which is the IRS requirement. If you earn less than that, we give you the ability to download your transaction history, including interest payments, to be able to make that filing and determination on your own. And I believe it's going to be a taxable event for most people, but you should check for yourself, either with your tax planner, your tax software, or whatever. I believe the answer would be yes, but everybody's situation is going to be different. Let's see. And so, yeah, just to be clear, you will be getting a 1099 if your interest is above a certain amount. Catherine asks, this is a good one. Thoughts on Janet Yellen's comments on Bitcoin? Is that what caused the price drop? So Catherine, let me take the second question first, because I think that's the easier question. I do not believe that either Janet Yellen or this nonsense about this author who inappropriately wrote that there was a double spend event on Bitcoin were in any way responsible for the price drop. I think the price drop was a natural ebb and flow for a bull run. And again, I'm going to show my favorites. Mind your P's and Q's as it relates to Bitcoin charts. The pullbacks that we got in 2017, which were all higher than the pullback that we got this week. So I do not think that it was Janet Yellen that caused the pullback, which is good. I don't think that I don't think any one politician would be in a position, unless they came out and said it's all out war on Bitcoin. Which I don't see that happening. I think the pushback on that is going to be too great. So, look, what do I think about her comments on Bitcoin? You know, I can give you some comments she made a few years ago where she was very bullish on Bitcoin and very bullish on cryptocurrencies for the banking system. I think her comment on terrorist financing as it relates to crypto is complete nonsense. Money laundering is by and large a banking play. U.S. banks are by far the biggest money launderers in the world. This is an established fact. Dollars is the primary means for laundering money, both in paper cash and via certain types of bank accounts. Again, history has proven this to be true. It's not my opinion, it's a fact. The ability to, if you want to launder money, don't use Bitcoin. You're going to get caught, right? And so it's this idea that terrorists would use Bitcoin. I don't buy it. So look, I'm not saying people can do illicit activity with anything, computer, internet connection, and so I don't think that Bitcoin is going to be over-regulated as a result of these comments. And I think she's going to learn. I think she's going to realize that she's focusing on the wrong thing, and it won't matter eventually. I could be wrong. I think there is a lot more crypto regulation coming for banks, exchanges, companies like Abra, but I don't think that will affect the average consumer. I think this just affects what we have to do in the background to provide the service that we do. And hopefully in a way that doesn't dramatically increase our cost of providing that service so that you aren't stuck with a higher cost as well. We want to keep that cost as low as possible. Somebody asks here, DMark JW, please issue Abra debit cards. It'll be really nice to just swipe around when making purchases. So I can't say anything there. Just keep coming back to Money Talks in the coming weeks. But I think that's a great idea. Let's see, we've got a lot more questions here. What do I think of Goldman Sachs being more open to Bitcoin? Well, Trevor, let's see. So I'm ex-Goldman. I was really pissed when I read their comments last spring. I went on Peter McCormick's What Bitcoin Did, and we debunked the Goldman report together. It was completely ridiculous. I assume that the latest moves into crypto are from a completely different part of the company. Keep in mind that there are thousands upon thousands of employees. So I should also say when we're debunking a Goldman report, it's not a corporate opinion. It's the opinion of one or two analysts. So you've got one or two analysts who are pro-Bitcoin. You've got one or two analysts who are anti-Bitcoin, or whatever that means. I don't even know what pro or anti-Bitcoin means. It's just software. Don't use it or don't use it. My guess is that over time, they're going to use it. Why? Because their clients want it. They're in the business of making money. They're in the business of servicing their clients. Their clients are going to want crypto. Their clients are investing in crypto without them. It behooves them to get into the crypto space now. That's what's going to happen. So all of this stuff about they believe in it, they don't believe in it, it's all nonsense. Okay? They're going to do ultimately what their clients want. And right now, clients want crypto. All right. So let's see. Why is the transfer from Abra interest account to trading account not instant? That's a good question. So think about this for a second, right? So how do we generate the interest on those accounts? Well, we run a lending desk as to, following up on the question from before, from Andrew. And in addition to that, we keep a significant percentage of those funds in reserve. If we didn't, the interest rates would be even higher, but we don't want to do that because then it would take even longer to get access to your withdrawals. Now, if your withdrawal is anything less than like a few $1,000s, it's near instant today, right? Either minutes or seconds. Worst case, maybe an hour. If your withdrawal gets into the tens of thousands or hundreds of thousands of dollars, it might take a few hours or a day. If it gets into the millions, it depends. But we do ask for up to 7 days for the really, really large ones, particularly in the millions. But I've never seen it. I've never seen a withdrawal at Abra take more than a day. So it's just a function of the fact that we're putting that money to work in a very safe way to make effectively free Bitcoin as interest for you, or free dollars as interest for you, and therefore we're managing reserves to be able to process those deposits. I hope that makes sense. What do I think about NFTs? How can we participate in this market? I am very bullish on NFT technology. NFT stands for non-fungible token. An ERC20 token, for example, or Bitcoin is supposed to be a fungible token, meaning that one Bitcoin is equivalent to one Bitcoin. You may have heard of CryptoKitties, which was probably the most popular non-fungible token from the last crazy bull run we had. And the idea there is that each one is different, like collectibles, like maybe your kids collect Pokemon cards, for example. Each Pokemon card is different. That's why they're called non-fungible. Art objects that you collect would be considered non-fungible because no two art objects are equivalent. And so having digital representations of collectibles or art is a very interesting idea to me. I haven't seen anything beyond digital collectibles that I'm super excited about, like games and trading cards. There's a huge movement right now in buying art as NFTs. It's not something that I'm particularly really excited about yet, because I haven't seen a model that gets me excited for the digital representation or the digital NFT ownership of the art versus having a physical work, unless there's both. That's, I think, is interesting, meaning I can prove that I own the physical work somehow via the digital NFT. I haven't seen that really yet, but I think it's coming. All right, so we'll see what happens. It's very early. We're early in this whole space, right? NFTs didn't exist a few years ago, right? The idea existed, but there was no implementation before Ethereum that could do anything. Okay, so what else? Any thoughts on Polkadot? I haven't checked the Abra app yet, so stay tuned. I can't announce when, but I'm pretty sure, certainly for international users, no specific dates, but stay tuned. Obviously very bullish on DOT and what's happening there. The price run up has been astounding. So we're working with our custody partners to get it turned on as soon as we can. Let me take a step back and just give an update on the Abra interest account. I'm getting a lot of questions on that here, so let me address that. I'm getting thank yous here for answering the questions. No problem. That's what we do. I'll also get back to Clubhouse in a minute. We do have a few people there, so that's great. If you have a question on Clubhouse, just raise your hand. I'll get to you in a moment. All right. So let me just answer some of these questions on the Abra interest account. So since we announced that users could earn 10% on USD and 5% on Bitcoin and Ethereum, thousands upon thousands of you have taken advantage of this to the tune of hundreds of millions of dollars. Honestly, we're almost surprised at the response that we've gotten. We expected it to be a hit, but it happened even more quickly than we could have expected. So we're honored and humbled at the response, but we take this responsibility very seriously. It's part of why I do this show. We're very transparent about how we manage custody, how we earn the interest on the product, how we manage reserves, what we won't do with those funds, for example. Honestly, we simply built a product we wanted for ourselves. And you'd be happy to know that we also have our money in the Abra interest account. I wouldn't dream of managing my cash or crypto any other way. So we've improved the Abra interest account in several key ways since we launched the product. So let me get to, this relates to some of the questions I'm seeing here, right? So one, we now support unlimited deposits from anywhere in the world. I've never seen a product like this, meaning if you wire Abra $10 million, okay, it's gonna work and you're gonna be able to earn interest on that money. But we have people wiring us $50, right? Or depositing $50 via a cash network partner we may have in the Philippines or Guatemala. And we love that. I love that we have a single product that works in 150 countries where some people are depositing $10 to earn interest and some people are depositing $1 million to earn interest. If that doesn't say we've democratized access to financial services, I don't know what does. It's fantastic. I love it. Deposits from our new crypto marketplace on Abra.com now support local payment types like SEPA in Europe, Faster Pay in the UK, Apple Pay and Google Pay for both credit and debit cards. Super cool. I've often used Abra.com to do a quick load of $25 into my Abra wallet, maybe because I wanted to send somebody some money or I wanted to show somebody how to buy Bitcoin really quick. It's really cool. Okay, so we've also launched a new service, Abra Platinum. This includes our new over-the-counter trading desk that allows customers to perform very large deposits. So that enables you to trade between currencies without leaving the Abra app. So for example, let's say that you're holding a fair amount of dollars in the interest account and you want to buy Bitcoin. And somebody asked the question, well, what if it takes me 3 hours to get my money and there's a big price run up in Bitcoin and I want to, or a dip in the price of Bitcoin and I want to buy right now. So if you're using our OTC service, we'll actually process that trade for you before the withdrawal even hits your trading account. And then you won't miss the price dip. So if that's a concern, you can simply go to abra.com/OTC-services and sign up immediately for the Abra Platinum and you'll be able to do those trades. And I think they generally support trades larger than 25,000 and up. Okay, so that's another option that we've added to the Abra interest account. People can now deposit current crypto and stable coins into your Abra wallet from any external exchange. All right, Coinbase, Binance, Kraken, Gemini. And then once funded, you can start earning the daily compounded interest immediately and just move that money over to the interest account. I would say at least 50% of our users are now depositing crypto from the exchange that they used to use, moving it into Abra, because you can trade and earn interest in the same product, right? So again, it's simply the product that I wanted. I took a chance and I said, hey guys, let's get together and build the product that I really want. And the team gave me input and we all decided, hey, this is the product that we want for ourselves. So now I've got it for myself and my team has it for themselves and we can invest, earn, trade, and send money all from one app. It's awesome. And we're not done yet. We're actually a couple of weeks away from some really cool announcements. And we're gonna take this app to the next level in the next few months. And not only is it a breakthrough, but what's coming, I think, is an even bigger breakthrough. So stay tuned for that. My team is telling me to stop giving stuff away, so I'm going to stop giving stuff away. All right, so just to recap how this works, because I'm getting even more questions again on how the interest account works. So, and then I've got a couple of questions online and on Clubhouse I want to get to before we wrap up, because I can't believe we're on 50 minutes already. This show flies by for me every week. I love it. So the Abra interest account are accessible from the app, iPhone and Android. Okay, so hold on one second. Excuse me. So these are a new type of account inside the app. As I mentioned earlier, we partnered with Prime Trust, a U.S. chartered trust bank based in Nevada, to issue these accounts. So once you register for the Abra interest account in the app, Prime Trust will verify your personal details, which can either be instant or if there's a problem like with an ID photo, it might take a few hours, depending upon the details you provided. And this is global. You can do this from almost any country in the world. After being approved, you'll get a push message to your Abra app. You can deposit your dollars, Bitcoin, Ethereum into the interest account. You can wire the money, transfer existing crypto, use Abra.com marketplace to make your deposit, whatever works for you. We update the interest rates offered weekly. Honestly, they don't change very much. I don't think the dollar rate has changed since we launched the product. I think the Ethereum rate has gone up once, and I think everything has more or less stayed the same. Interest rates are set similar to how a bank sets rates for cash deposits. The difference here is that the rates we're able to offer are much higher than what a bank typically offers, mostly because the bank keeps most of the interest that they make, and here we give most of that interest to you. All right, so that's the most important answer in terms of how the rates are so high. It's because in the banking world, the bank keeps most of the money. Now, how are we able to generate this interest in the first place? We talked about this earlier. Let me just recap. Our institutional lending desk is run by Young Cho, our chief investment officer who works for me. He's a veteran of the lending business. He's worked not only in the traditional lending, but also in crypto lending. And we enter via his team into lending relationships with borrowers throughout the crypto universe. And as our volume of AUM, or assets under management, grows, we simply diversify our crypto investment portfolio to constantly lower the risk. And so all of these new borrowers go through our investment committee process, which reviews and borrows their risk, reviews and determines their risk profile and sets terms including interest rates, collateral requirements, and other relevant terms. And so ultimately, this investment committee approves all of these new institutional borrowers. And so somebody asked earlier about, and I'm seeing more questions about this counterparty risk. Counterparty risk is mitigated through high collateralization rates, appropriate interest rates, and we also reviewed how they're going to use the funds in the first place. Just because somebody wants to give us 125% collateral does not mean that we will approve them. If we don't like how they're going to use the funds, or we think it's too much of a risk for us to take on potentially maybe a small borrower, okay? And collateral calls to borrowers ensure that any price movement in the underlying collateral doesn't put your funds or my funds at risk. And we've never had a loan default or had a counterparty miss a collateral call at Abra. Okay, so look, we are in printing overdrive. Let me make this last point and then I'll take three more questions and call it a day. But we are in money printing overdrive. We have a new president now. Congratulations to President Biden, Vice President Harris. Fantastic. Finally, we have a female vice president. Looking forward to the day when we have a female president. But the money printing that has been taking place for the last 4 years is going to accelerate. It's not going to slow down. Right? So one of the things I'm most excited about is that the Abra interest account product works globally. A lot of people have been experiencing the inflation we're about to experience in their country for years. So that means people in countries with failing currencies can convert their money to Bitcoin, deposit them into the Abra app, and store them as Bitcoin or USD. It also means that we can take our USD and support it and store it as Bitcoin and earn interest on it. So we're seeing this with our large growing user base in places like the Philippines, Guatemala, Mexico, I hate to say it, even in the US, where people have a strong interest in this, right? So many government issued currencies have failed. It's almost impossible to keep track, right? The Lebanese pound, Argentinian peso, Venezuelan peso, Zimbabwe dollar. That's just the last 15 years, and there's more the last 15 years, right? In the case of Argentina, this is not a new dance. We've all seen this before. It just keeps happening over and over again. I saw a Google sheet recently that tracked the history of failed currencies over hundreds of years. There were thousands of them, right? I mean, a lot of them we never heard of, but there were literally thousands of them. Anyway, that's my rant. I didn't mean to go on a long rant, but somebody asked a question, and I had to answer, and it caused me to go on a rant. Anyway, Brandon asks, what is the fee on OTC trades? There's no fee. We simply take the rate they give us, and they bake a spread into that. It's usually a couple of dozen basis points. It's very low. It's for very large amounts. It's going to be a very good deal versus just going to an exchange. But just keep in mind something, and I get this question a lot. If prices are moving up very fast or moving down very fast, the spot price is not often the price you're going to get when you trade. And the spot price is the price you'll see on the chart. Because we're going to an exchange order book, if you're trading using the app, to fill those orders. And the amount of Bitcoin that may be offered at that price might be very, very small. So that means if you're buying $50,000 worth of Bitcoin or $10,000 worth of Bitcoin, you're going to get a price which probably isn't as good if the prices are moving quickly. Okay, that's why it's good to buy in a pullback, right? Because you're also dealing with the fact that that slippage in price is going to be a little bit more in your favor than it might otherwise be. Buying when the price is melting up is like a double whammy. Not only is the price moving up, but the slippage you're going to get is going to make it even worse for you when you're buying. So I'm not telling you not to buy when the price is going up. I'm just setting expectations so that you're aware that you might have this issue where there's an expectation on the price chart that isn't met when you go to the checkout screen in the app. This is happening a lot lately where users are confused by this issue. This is not Abra, doing some crazy markup on the price or something like that. That's simply the fluctuation of what's happening in the market during these crazy times. So keep that in mind. Let's see. I think we have a couple of questions here. Amanda, good morning. How are you?
On Clubhouse.
Yeah. How you doing?
I'm great. I appreciate it. So I heard you talk about NFTs. A lot of us are trying to figure out how to do this with Bitcoin versus just Ethereum.
Yeah.
So it would be awesome if you're interested in that, to ping you into some of these things.
Yeah, I'd love that. I'm really friendly with the guys from RSK. I've known them for years. For those of you who don't know who RSK is, they're a company that's basically built smart contracts that try to replicate what Ethereum does on top of Bitcoin, so that you could do things like NFTs. I think Stacks, the company Stacks, is doing that now. And so, yeah, I'm really bullish on trying to do this stuff directly via Bitcoin. I think Lightning has shown us that there are a lot of things we can do on top of the settlement layer of Bitcoin that we're not taking advantage of yet. So I'm super bullish on that. Yeah, I would love to hear more about it.
Awesome. I'll send you a DM. Thanks.
Yeah, thank you. Thanks for joining. Let me take one more question here, and then I'll take one more question online. So I apologize. I don't know if this is in reverse order. So I'm going to go with Radu. I don't know if you came in last or first. So Radu, your mic is on. Do you have a question? Good morning. Do you have a question for us?
Morning. Yes, I do. By what year do you think all currencies will get to zero?
So by all currencies, I assume you mean fiat currencies. So for those,
Fiat, yes.
Yeah, I assume people are hearing the questions from Clubhouse. I've got the phone next to the mic. But Radu's question was, by what year do I think all fiat currencies will have failed? Look, I don't have a crystal ball. I get asked this a lot. I think that at the rate we're printing money now, I think we're in the end game. I've made this point many, many times. I've laid out scenarios in my Twitter feed of what I think can happen in the end game. I think that what happens is eventually China will not borrow from us. The petrodollar has effectively failed. The petrodollar was basically the idea that when we moved off of the gold standard, China was financing our debt in large part, and that allowed us to basically leverage our oil imports to finance our debt, and that just won't work anymore. So we're late in this debt cycle, which is what's given rise to populism. Populism gave rise to Trump. Trump didn't give rise to populism, okay? And when you're late in a debt cycle, bad things can happen, right? I wouldn't be surprised to see in the next 20 years, bond rates skyrocket, interest rates skyrocket because nobody wants to borrow from us anymore. And when quantitative easing fails, it's going to be ugly, really ugly. And the bottom line is, I don't know when it's going to happen, but I unfortunately, and I don't want it to happen. You know, I don't. Bitcoin's success is not dependent upon the dollar's failure. What's happening with the dollar is rocket fuel. It's not the reason that Bitcoin is succeeding. Okay, I actually want our government to succeed, and I want us to have a stable currency. But I don't see it happening right now. I see the opposite happening, just based upon everyone's actions. And I wish that we would, in this country, learn to absorb short-term pain for long-term gain, as opposed, we do the opposite. We absorb short-term gains via things like printing money in exchange for long-term pain. And we're passing on this pain to our great-grandchildren. Never mind our grandchildren. Now we're on our great-grandchildren. If you look at the debt and the way we print money and the value of money and what we're doing here and its impact and where we are in the debt cycle, it's an enormous price to pay, and eventually someone's going to have to pay it. So, sorry, I'm answering a question you didn't ask, another rant. So I don't know why. It's supposed to be Friday. It's weekend. We're all happy. Why am I ranting? I don't know. I'm going to stop ranting now. Anyway, Radu, sorry I don't have a more exact answer for you. I'll go back to my Oracle crystal ball and see what else I can figure out. But no, I'm just kidding. Sorry. It's a fair question. It's going to happen in my opinion, unfortunately. I don't know if it's 10 years or 50 years. I just don't. Okay. So we do have a couple of more questions here online.
Thank you, Bill.
You're welcome. And I'm going to take one more. I'll stay on for a while, and if people want to ask questions or just shoot the breeze. Let's see. I'm getting some repeat questions here, so I don't want to do that. Actually, let me take one. I kind of like this Clubhouse thing, so let me do one more here. Let me try Daniel. Daniel, I'm going to put you on here. Hopefully, are you there?
Yeah, I'm here. You already answered my question. I was just wondering if Abra was KYC AML compliant.
Yes, we are not only KYC and AML compliant, we're registered with FinCEN as a money service business in the United States. We're a licensed lender in some places, and we operate in multiple jurisdictions via different companies. So thanks for that question. And we'll do one last one here, and then we'll wrap it up. Phil, I think Phil on Clubhouse has a question. So we'll take one from Phil. Phil, good morning.
Good morning, Bill. Love everything that you said so far. I haven't put a lot of attention on Abra. I have heard of y'all, and really, I'm just trying to kind of get the idea of what it is that separates Abra from the other exchanges out there. I love like the honest, transparent info that you give out about the whole lending and collateralizing services, but just to get like a bigger picture of really what separates y'all, other than like your just stellar ethos.
Yeah. Look, this is a fantastic it's a fantastic ending question because it really comes down to vision and mission, right? So our vision is a world of democratized access to financial services where everybody has access digitally to the same set of services globally, right? And we think that this is the time for that, right? There's this phrase in Silicon Valley, software is eating the world. That hasn't happened with money and banking. Yeah, your bank account is online, but it's the same bank account from 50 years ago. It's just accessible via a mobile phone. Now it's fundamentally changing from the inside out. And what we want to do at Abra is we want to make that available to every consumer in the world. At the same time, money itself is changing and it's becoming a digital currency for the first time. The fact that your money was accessible via an online database as a stored value didn't change the fact that it was the same printed dollars that the government was printing for 100 years. So now money and banking are both fundamentally changing from the inside out. That's amazing, all right? So now how does that relate to Abra? We want to basically be that crypto bank that everyone defaults to because we offer the widest range of cryptocurrencies. We think competition in the crypto world is good. We want to have the best banking experience in crypto. You earn interest on it. So you can send it to other people. Hopefully soon you'll be able to spend it. People aren't really spending crypto much yet. I think they're going to, and we want to get out in front of that. So we're not really catering to that professional trader, right? So Phil, I think that's an important distinction here. We're catering to the everyday consumer. We wanted to build a product that we ourselves wanted to use as the default crypto banking product. And in the early days, that meant getting access to Bitcoin, getting access to Ethereum, being able to swap conveniently between currencies. Now it means earning interest, lending to businesses, hopefully soon lending to consumers, payments eventually, being able to send money globally. These are all things that matter if you're a crypto bank, but probably don't matter too much if you're focused on being the best exchange you can be. So that's not what we're trying to be. We're not trying to be the best exchange. We do want you to be able to trade between currencies, but we're trying to be the best new crypto bank that we can be, and that's I think going to be it's actually a much bigger opportunity than exchanges because the crypto bank will eventually apply to billions of consumers who are going to do all of these things that I talked about and replace finally these awful traditional banks that have been screwing us on multiple levels for decades.
Awesome. That's what I love to hear, especially that last point. But love what you are doing.
Thank you. Okay, so officially we're done. Overtime. I've got a question here on Tether. How much impact can the Tether judgment have on the price of Bitcoin in the short term? With Tether turning over all these documents, there's a really good article that Dan Held wrote. I'll give you the TLDR on some of it. I mean, the purpose of Tether is basically to make it easy for people who don't have access to the banking system in real time to be able to trade, right? Without dealing with all of the cumbersome regulations that may have been, in place in the US, but not necessarily offshore. This doesn't really apply to Americans, for example, or people in Europe, or honestly most countries, but a lot of traders like Tether because it replicates the dollar without the typical slow kind of settlement times of the traditional banking system. That's the problem that Tether was basically solving. Now it's incumbent upon who's ever issuing that tether to actually be holding that much money in the bank account. Okay. So the bottom line is the question is Tether, the company, holding the same amount of cash or assets relative to the amount of Tether in circulation? The bottom line is no one knows. But the irony is we don't know in the traditional banking system either. Okay? I'm not saying that's good or bad, it just is. All right. So I've seen recently that other people have I've seen proof online of people that have wired money to Tether, that have basically withdrawn money from Tether. So we know it's working, all right? And they should publish audits, right? And Dan made this point in his article that most large auditing firms won't even take Tether on as a client. Well, that makes it difficult to do a high quality audit if the major auditing firms won't even take you on as a client. I hope one will, but I haven't seen it yet. Okay, so the bottom line is I don't see Tether having a significant impact on Bitcoin over time, but who knows? I just don't see it. I think you could get small blips if something were to happen, but most Tether use is outside the US, for example. The US, we use the banking system. Other other stable coins like USDC are growing even faster. So to me, it's a big nothing burger. Okay, so one thing I forgot, for those of you who stuck around, is our contest winner. Maybe you've been sticking around because you've been waiting. I totally forgot. So April Shardrich, April Shardrich Manuel, you are our weekly crypto contest winner. You win $100 in Bitcoin. The tweet was, "Don't let nobody write your own story." MNL. Awesome. So congratulations. We're going to keep running that contest. Please promote Money Talks. If you're on YouTube, click subscribe. It helps us promote the show. When we're done, the links will be available to share with your friends. All right. I'm going to stop the feed here online and wish everyone everyone on YouTube and Twitter and Facebook a fantastic weekend. If anybody wants to join on Clubhouse, I'll stick around and answer a couple of questions. So have a great weekend. Thank you for the engagement. Really fun show.